Hello guys, and welcome to another educational video. In today's video we're going to be discussing directional bias on the monthly, weekly and daily, and some of the things that we use as a rule of thumb for our trading signals and how we arrive at a bullish or bearish bias. I'll preface by saying this is an educational video, and anything that I say is not to be taken as trading advice on the Euro USD. Okay, so this is a monthly chart, and we like to just don't go too crazy on our analysis in terms of marking up the chart and having way too much on there. But we like to just keep things simple and have some good, solid support and resistance lines as a start. So what we'll do is we don't need, as you're looking at the monthly, remember each one of these candles represents 1 month. So until price is near here or near here or near here or near here, don't really need to be worried too much about these previous highs. Right now we're in this sort of small pullback, very small consolidation that's forming in this little area here. So what I like to do is I like to look at previous support and resistance areas and see what price did around those areas. So what we'll do is we'll mark off a previous low here. And the reason that I'm opting to use this low here is because you can clearly see, I'll just zoom in a little bit, you can clearly see that we had a previous low here, price came almost to it, price came again to it, went through it twice. So the first month it went through, the second month it went through, and then we kind of, we've been grinding higher, really nice steady uptrend for almost 6 months, 1, 2, 3, 4, 5, 6 months, nice. A good 4 months of those were, solid trending months, and this move here has taken us above this high here and this high here. Okay, so we've broken 2 swing highs, 1 and 2, or we'd say 1 and 2, I guess, but we've broken 2 swing highs. So we've gone through that, we've pulled back slightly, and now we're kind of grinding a little bit higher here. Okay, so that gives us an overall picture of what the monthly is doing. Don't really need much else outside of that, because again, we're trying to keep this basic. Excuse me, we're trying to keep this basic, and we're trying to keep it simple. It's very easy to overanalyze things, but we don't like doing that. We like to get our levels, and then we transpose those levels down to a weekly trade, like a weekly chart, and we take it from there. So far, we've I like to look at the context behind the moves that are actually happening. So right now, we were going sideways, sideways, sideways. The market dropped down. It broke a previous low, but look what happened. It didn't continue going. Let me zoom out a little bit so I can show you. It didn't continue going down. Instead it opted to go down, cleared the lows here, and then has gone back up and broken 2 swing highs. Okay, so that shows strength to me. You understand? It's not. We can class this small area here as rejection. It's come down. It's rejected that level, and then it's been grinding higher, broke 2 swing highs, and now we're stabilizing in this area. Right, so that for me, there's a storyline there. If it wanted to continue going lower, it would have continued to go lower. There's many different pictures. It could have gone up a little bit here and then continued going lower. It could have ground up here, took out the swing high and then continued going lower, coming back into the consolidation range. But from what we can see here, we can see that it's come down, it's broken previous lows, and it's grinded higher, breaking 2 swing highs. And we have a nice sort of void up here, so to speak, or inefficiency, or however you want to term them, an area here where price has only been coming down, so price may want to go up and fill in this inefficiency up here. So as it stands, the monthly looks decently bullish, we'll say that. Alright, so we'll drop down to a weekly. Alright, and we'll zoom out a little bit on the weekly. So these are our monthly levels. Okay, then here's a previous low. You can see that was broken. You can see a little bit more detail. We came down, stopped in this area, came up, came down, but it's failing to make lower lows. Okay, so we've got a higher low, and then it's just been kind of drifting higher. Broke the 2 swing highs, and now we've pulled back into a previous high, stabilized a little bit, back up, pulled back in. So excuse me, we may get another push up. I imagine just based on what I'm looking at here, something to the effect of this. Okay, now that doesn't necessarily, and again, guys, please understand, I'm not telling you what I think is going to happen, because what we're trying to do is arrive at a bullish or bearish bias. Okay, and this is what we do with everything, that we do. So what I'm trying to get at is this is not trading advice. Okay, this is just an analysis of, in this case, the Euro USD, and we're trying to decipher whether or not we're bullish or bearish, and then we can take that bias into the week and look for our trades. So we may get something like this, maybe not as pull back or whatever, but we may get something to the effect of like this. Look, and again, remember the storyline behind what we're doing, guys. Okay, and we may even challenge these previous highs up here. But remember the storyline, the context. We were going sideways, sideways, sideways. The market started to break down. We break out, and instead of continuing, price has gone all the way back up and broke a previous swing high here and a previous swing high here. This shows strength to me, and you can see it's nice and controlled as well. Really pay attention to the way that the candles are forming. They're not huge, aggressive, massive bars. They're controlled, very controlled. You've got some really nice, up candles. Kind of small pullback candles, black ones. Really strong week here. Kind of slowly grinding sideways. Nice, decent bar here. Small bar, decent bar, decent bar, decent bar. So you understand it's controlled price action. It's not erratic. It's not all over the place. It's nice. It's controlled. And it's a grinding pair at the moment. This has been grinding higher nicely, and we've pulled back into previous highs. So this may very well become support now. With these two areas here, I could even go as far as I'll mark it up a little bit different for you so you can see it a little bit better. So we'll do this, and then I'll take a shape, and we'll just kind of fill this in here a little bit so we can kind of say or see. Let me just tidy this up a little bit for you as well. Something like this. So this is so far looks like it's holding price pretty well. Okay, and let me take these off and I'll zoom in and show you something else as well, which we're seeing. So you can see, and remember, each one of these bars, guys, is a week. Okay, so we can see we pull back into this support area, previous highs, which seems to be holding price pretty well. We've ground back up, down a little bit, made a higher low here, and so far so good. This particular week's looking pretty strong. So if nothing else, for me, the way that I'm looking at price action right now, if nothing else, we may very well challenge this previous high. Okay? And, apologies, and I just have to grab this. There we go. So we may challenge this previous high. So from here, where we are right now, price action, where price is right now up to the previous high, we're talking about 152 pips, so we'll call it 150 pips. There's maybe 2 or 3 trades, in that small little range from here to here. And 150 pips for the euro as a weekly range is more than doable. If you take a look at some of these decent bars that we have here, we've got a 240 pip range there. Even on one of the smaller weeks, we've got around about 135 pips there. About 150 pips there. So far this week, we've done around about 104 pips. So it's not outside the scope of what Euro USD is capable of moving. 100 to 150 pips is more than doable for a week on the Euro USD. So we've transposed the monthly levels, which were these ones here, the big ones, onto the weekly chart. And now we have a previous high that price could potentially be reaching for. Okay, so far so good. Everything's looking like price is going higher. Okay, and again, we're very patient. Okay, just based on what I've done so far, I personally believe, okay, and again, this is not trading advice, but I personally believe that euro is bullish. Okay, so we're going to be taking this into the following week. Don't forget, obviously, I'm recording this during the holiday period, so the markets won't be open going into the new year until the new year, but because we've got the weekend coming as well. But let's just assume that next week is just a normal week. I'll be doing the analysis on Friday's close and some analysis on Saturday, and I'm arriving at a bullish bias for the Euro USD. So we will wait for Sunday's open, see where price opens. Has it changed the context of what we were, of what I found on Saturday? If no, then I can continue with my bullish bias. We're going into Monday. We generally allow Monday's price action to kind of unfold. So it gives us a better idea of what's probably going to be happening throughout the week. So we will allow Monday to trade, sometimes even Tuesday, but we're generally looking for a Tuesday, Wednesday, or Thursday trade. Okay, on some of the pairs that we look for, Euro USD is a very fluid pair. It's obviously the most popular and traded the most, on the Forex market. But Tuesday, Wednesday, and Thursday are generally the days that I personally like to look for in trading. I like to let Sunday and Monday do its thing. I'm not in a rush to open trades, and we as a trading group, we're not in a rush to open trades. And I've mentioned this before. We're very good at what we do, and the reason that we're very good at what we do is not because we're smarter than anybody else, or because yes, we have proprietary stuff, things that we've developed ourselves, but the general basics of the market are the same regardless of whatever asset class that you're looking at. And because we're very patient, which is the thing that I 100% stand by, is the reason that we are good at, as good as we are when it comes to our trading signals and the services that we provide, because we're very patient. We wait for things to unfold. We're not in a rush to throw money at the market, excuse me. We're not in a rush to throw money at the market, which is the worst thing that you can do. And a lot of people don't understand this. When the market opens on Sunday, they want to be in the market. When it opens on Monday, they want to be in the market. When it opens on Tuesday, they want to be in the market. You don't need to do that. If you could make consistently 20 pips a week, 30 pips a week, 50 pips a week, and those pips come from one or two trades that are very focused trades, calculated trades, you've done your research, you're waiting for your price. You don't need to just throw money at the marketplace. Be patient, let things unfold, let price tell you the story, and then you take that story and then you put your money on what you believe is the highest percentage of a positive result. All right. So going back to our analysis, so far so good. We're seeing that Euro USD is looking like it wants to go higher, okay, and at least reach for this previous high up here, okay, which we'll just call resistance for now. All right, so let's drop down to the daily and just zoom out a little bit more. Let me just see where we're at. If I do this, and I can kind of go sideways a little bit. Yeah. So now that we've dropped down into the daily, okay, the daily chart will give us think about it like this. Monthly's kind of like the big picture, right? The weekly is a more detailed version of that picture. It's like if you're looking at a painting from 15 yards away, okay, you can get the general idea of what the painting is about, but the closer that you get to the painting, the more detail comes out. The more vibrant the colors become, and the closer that you get, and it's like what we're doing here. We started at the monthly, 15 yards away. Now we went down to the weekly. We're looking at a more detailed version of what price has done during each of those months, okay, because one monthly bar is 4 weekly bars, okay, which is 30 daily bars, okay. So excuse me, it's not 30, it's actually less. It's around about sort of 20, anywhere between 22 and 25 trading days, but we get a more detailed idea of what's happening. All right, so each one of these sections delineates 1 month. All right, so on our monthly, and I'll show you this before I continue, on our monthly, okay, all we will see is the following. All right, so we'll start here and we'll just go up to the top. All right, so this is our monthly bar, okay, and this monthly bar represents this price action here, okay. But on the monthly, this is all we see. We just see 1 bar. We don't see the drop down first during the beginning of the month, a nice steady climb sort of first, second week of the month, or week and a half going into the month, then a nice controlled move back, then another nice grind higher, and then a pullback. We don't see any of this detail in a monthly bar, okay? So the monthly for us is more about getting the strongest support and resistance levels. Then we drill down to the weekly to refine our levels a little bit more. And now that we're on the daily, we can see the same picture. We've come down into our monthly support level, okay? We've come higher, nice, strong move up, controlled pullback, nice push up, breaking all of these 3 swing highs, okay? So let me mark off a thinner so we can differentiate the difference between the the levels. Okay, so we have these three levels here have all been taken out by this monthly move. Grind up, controlled move back, nice strong push up, breaking these three swing highs, then a nice controlled move back into the support level again. So think of the picture, think of the story, think of the context behind what we're showing here. Okay, we've had a nice move down. It breaks out. Support level holds it, or breaks down, should I say. Support level holds it. We have a nice grind back up, controlled pullback, push higher, breaking three swing highs, and then a pullback into support area, and then did it continue going lower? No. No, it didn't. It goes back up, and now we're approaching this small previous high here, and then we have our potential weekly high, monthly high here. Okay, we'll stick with the monthly, but we have our monthly or weekly potential high, which is roughly around about 150 pips, we said. There you go. All right, so this is the range that we have to play with. Okay, and based on the context that we see and the way that price is moving, the stronger up days as opposed to the not so strong down days is showing me personally, right, that Euro USD may potentially be reaching for this area up here. Okay, so what we would do is the following. All right, we know that we've got 150 pip range. Okay, and again, under the premise that we're doing this on Friday's close or Saturday or Sunday before market opens. Okay, so while the market's closed and we've finished out the week, we come back to the marketplace, we have a look while the market's closed, we mark off our levels, we get our buyers for the week, and then we wait. Okay, so Sunday opens and we see a gap down. Okay, but we don't need to do anything. Let the market do what it needs to do. Let's say it gaps down. Monday it comes down a little bit lower. Tuesday we have a really nice solid day. And then on Wednesday, having seen having seen Sunday, small move down, gap down, and then a continued move down. Monday continues to go lower. Tuesday starts to grind higher, and we get back up, say, for example, towards what would be this previous high. So if we get a bar here, and then we have a nice grind back higher, that shows bullishness for me. So I will be looking towards New York close on Tuesday to London open on Wednesday for a potential long, and then we wait for the market to open. We wait for the London session to open in the morning, which is predominantly when I trade personally. I will wait for the London session to open. I will have my levels in based on the daily, based on the monthly, weekly, and daily. Based on the context that's going on, we may even potentially drop down into a 4-hour chart, and then we will transpose those levels into an entry. So we could say, for argument's sake, let's say price pulls back to here, grinds a little bit higher here, and then we could maybe potentially have an entry, say, at 19.20. Yeah, so 119.20, you know, with a stop loss wherever the lower time frame swing low forms, right? Say generally anywhere between 20 to 35 pips away, with a potential profit target of around about, say, anywhere from 100 to 150 pips. All right, and then then we get into the management side of things where the trade is in your favor. If you get stopped out, you get stopped out. There's nothing you can do about it. That's just part of the business. Okay, but as the as the trade starts to move in your favor, you lock in 30 pips. You bring your stock to break even. You've got money. It's banked. You can't risk anything else on the trade, you know, minus a few pips for spread, and you have a potential, you know, another 120, you know, anywhere from 100 to 120 pips of potential movement for the weekly range that could unfold in favor for you, you know, and then you will continue to manage the position as it's open. All right, so this is just a general overview of some of the things that we do, guys, and I'm hoping that you found this informative. You know, as a general rule of thumb, we start with the monthly. And I'll tell you this as well, because obviously if you start on, you know, the 1st of January, for argument's sake, and you look at the monthly bar, there's nothing there. You know, generally the monthly, you will have one level or two levels on the monthly chart that will be there for quite a while. You know, but you have to be aware of these levels because they're very strong levels, and you're going to get reaction there once price hits that level. So those levels will be on your charts for quite a while, sometimes even months. Okay, when you drop down to the weekly, the same again. Sometimes it takes weeks and weeks for these levels to to be approached, or to for price to reach these levels. On the daily, obviously they get there a lot quicker. So as a general rule of thumb, you want to be looking at the monthly chart at the close of every month. Okay, looking at the weekly chart at the close of every week, and looking at the daily chart at the close of every day. All right, and monitor your levels. Keep an eye on price. When you mark something down, guys, okay, and just throw a random figure out there, for argument's sake, 1.20. You've got the level marked, and you believe that price is going to reach for that level, okay, and it takes a week and a half to get to that level. Don't just put it on there and expect it to go there and nothing else. Monitor it. Keep an eye on it. Is price moving towards that price point? Okay. If it is, how long is it taking? You look at the weekly bars. You look at the daily. The daily is going to be the place where most of you will live. The daily chart is very versatile. It's very similar to the 1 hour chart for day traders. You can get a good overall market structure on a 1 hour chart when you're day trading, just as you can get a good overall big picture or small picture on the daily chart. So mark your levels off, and at the end of each day, have a look. Where are we? Are we closer to this? Are we further away from that price level? And monitor it. And as price is if you're correct in your analysis and price is moving towards that level, keep an eye on it. Because ultimately, if you believe that price is going to go up here to this level up here, and you're about here, and you've had a nice controlled pullback with some really good price action to support your theory of it going higher, then you still have a good 75 pips. And remember, guys, me personally, I can tell you this right now, I'm a scalper. Generally my trades are anywhere between 20 and 30 pips and I'm done, and then I'll be looking for something else. I do have longer term accounts, but again, it's not hundreds and hundreds and hundreds of pips, per trade. It's nothing like that. At the very most, I might drag out, I might be able to pull out, sorry, not drag out, but I might be able to pull out maybe 50 to 75 pips, or possibly 80 pips or 90 pips, on a decent haul. But generally, I'm doing anywhere from, at the absolute most, 2 to 4 trades, a week, and I'm looking for 20 to 30 pips a trade, and that's me done for the week. So you have to have an idea of where you think price is going, mark your levels off, be consistent with your analysis, and be consistent with the times that you sit down at the end of every month, at the end of every week, at the end of every day. Okay, so I hope you found this informative, guys. Obviously, there's a lot more that we have to teach. There's a lot more that we're going to be going into, and there's going to be a lot more services that we're going to be introducing to the site, to help traders get to where they want to be. So we hope you found this informative. Keep an eye out for the updates, and we will see you all in the new year. Merry New Year. Not Merry Christmas, but I know Christmas is gone. But I wish you all a very happy New Year. And we may be able to get another 2 or 3 videos out before the new year. So keep an eye on your notifications, through the various channels that we use. Keep an eye out for regular updates, and we'll see you all in the new year. All right, guys, take care. See you soon.